So welcome everyone. And as usual, before we start, just a quick comment on the disclaimer. Everything you hear in this discussion today is not meant as investment advice. It's always important to seek your own professional advice or do your own research. So nothing we say in here is intended for you to as a guide to purchase. But with that said, welcome again to the next Insights call from Amati. Normally, when we do these calls, the aim is to come up with or discuss a subject that we think is interesting, something that we've researched and are looking to invest in or have invested in. We don't normally aim to discuss sort of things that are just most important in the press at the moment. But this week, the news out of the AI industry was so important. We thought we should discuss it and some of the implications from an investment standpoint. Obviously, most of you will know this little-known Chinese company called DeepSeek, which had this very impressive and impactful result from one of their models. It's really sent shockwaves through the whole AI industry, and it's causing a lot of investors to kind of reconsider the subject. Now, it's a complex area, and we're not going to dig into the depth of the complexity too much today, but just to give you a bit of an overview, I'm going to hand over to our resident semiconductor physicist. Over to you, Mikhail.
Thanks very much. Yes, so just a quick recap on what's happened. So this model was released, in fact, a week before it captured the public imagination, which was very impactful on the share prices, as you know. But of course, the company released previous models before that, and their work has been known. The headlines were, this is the model that is really high performing. It matches, in some cases exceeds performance of some very well-known what's called frontier models, leading large AI models. And it's doing that with fewer GPUs, fewer processors, effectively H800s, which are the NVIDIA chips that, if you like, de-weaponized, de-spec'd specifically for Chinese market under the pressure from US government. Few of those with a lot less money spent on training. Now we know that information because they released a very detailed paper explaining what they've done, but they also didn't release enough for people to know exactly what they've done. So there's a lot of speculation and some degree of conspiracy theory around it. But ostensibly, they spent an order of magnitude less money, effectively, on training this model, and it does almost as good or better than some of the models that cost a lot more and used a lot heavier infrastructure. Now, when you look into the details of that, it turns out that, of course, they have what's called distilled other people's models, and they used other people's models to train their model in something called reinforcement learning, which basically means it's kind of an AI equivalent of copy paste. You use other models as teachers for your model. So it's a bit like, if you copied somebody else's work, it doesn't mean that it costs less to make that work. It means that you copied somebody else's work. Not an exact analogy, and I'm not inferring any IP theft here or anything like that, but the headline numbers are not giving you the full story. And there was a suggestion that maybe they had more GPUs and more powerful GPUs than they admitted to. But with all that said, it does look, and some of the experts we've had conversations with, this suggests there's some genuine, non-trivial technical choices, genuine breakthroughs being made, and the industry really set up and took notice and was, in near panic mode, thinking, how can we incorporate these new learnings? What does it mean for the infrastructure needs? What does it mean for how we train our models? And how fast our models can be copied by the fast followers? And kind of some of these questions, some of the more detailed questions raised by that is something, Graeme, you probably want to comment on in more detail.
Yeah, I mean, it is really interesting because obviously the question is now, do we need to the same extent, these huge supersized clusters of thousands or tens of thousands even of GPUs that we're seeing these new big models using, and not to mention all the associated infrastructure and memory and all the other things that go into these networks. And that in the context that so far AI hasn't really produced a lot of very compelling return on all that investment. And companies are increasingly under pressure to start showing some return. So it's right that these questions are being asked, we think. Now, from an investment standpoint, how should we think about that? Well, if we look at the kind of scale of the capex to date and what's already been booked, the most significant beneficiary so far obviously is NVIDIA. And they are already producing as fast as they can, and they've raised prices to pretty eye-watering levels already. So the kind of path to upgrades in the short term for that company is difficult to see. And for others in that space, we think, that at the cutting edge. But so the question is, does it lead to downgrades? This is effectively something of an asymmetric risk, we think. Now, either it's completely overblown and that it doesn't change anything for NVIDIA, so we're in a kind of stable environment for them, or there is a step function down in GPU demand. Now, how do we sort of come to a conclusion on that? Well, we need to look at who is investing in these GPUs and why are they doing it. Now, if you simplify it, there are two groups really. The first group is the ones that get all the attention. These are the frontier explorers, if you like, the OpenAIs, Google Gemini, maybe Perplexity, and a few other players. And these guys are pushing ahead pretty much regardless. They're trying to get to this point of sort of AGI, artificial general intelligence, which they see as being a kind of first come, most served outcome. So they're all desperate to try and win that race. And these companies have very deep pockets, and presumably they will have no change to their plan to keep investing flat out. And all DeepSeek's done really is just speed up the process, accelerate the process for them. The other group are the sort of large corporates, the companies that are trying to benefit. These are the ones that care about the ROI. They're trying to get to that promised land of efficiency and innovation that comes from AI. And for these guys, they're already some of the leading edge models are providing pretty good, pretty intelligent agentic tools for replacing call centers and offering some other sort of innovation and efficiency benefits inside the companies. And they are starting to use these tools already in a sort of ring-fenced environment, ready to roll them out commercially, we think, in the near future. So if anything, for this cohort, DeepSeek does, it has lowered the cost bar to some extent. Now, obviously, there are other implications to this. What happens in terms of the way that the leading players share their information? As Mikhail said, it seems like the Chinese players have kind of stood on the shoulders of giants to some extent to get where they are now. So does this lead to a retreat back into more secrecy? How does that help the industry? Do we see less open source information? Will we see more export controls? We've seen some from the US, very topical subject today, obviously, in the market. So, how does it affect the competitive advantage? Mikhail, what are your thoughts here?
Yeah, I mean, the view that market seems to be taking is the pie will grow. And we tend to agree with that. You've heard the word Jevons paradox, probably more times in the past couple of weeks than ever before, and that's a very familiar world for semiconductors. As things get cheaper, they're used more. That happened with PCs, that happened with memory, that happened with smartphones. The innovation proliferates if it becomes more affordable and rises the price elasticity curve. So, more AI everywhere, will happen if it becomes cheaper and the barrier to adoption is lowered. But what kind of AI jobs need to be done changes. If you shift capex to some extent anyway from training to inference, it might accrue to different companies, and that's something that we're working through, and the market is working through, and it's not yet clear. I mean, just to address something that you raised a moment ago, Graeme, that companies are experimenting in the lab, if you like, with using AI for the pragmatic, everyday corporate needs. And some of those things are going into production. But when they go into production, they move from that training to inference. You've trained your agent to answer, frequently asked questions or help customers with their service needs. Now you deploy that AI in a very different infrastructure, maybe riding very different semiconductors. And and often these agents are actually relatively small models. So you don't need a leading edge AGI wannabe type mega model to solve a simple problem of, I don't know, summarizing healthcare records, for example. And so those models are smaller. They're in an inference chip, not a training chip, and that really changes, where that capital is being spent over time. NVIDIA, to sustain its growth, needs that leading edge frontier model training to continue. And there it seems to be largely unchallenged today, except there is a growing prospect of so-called ASICs, a dedicated chips. Google obviously had one for a very long time. That's called TPU. They keep progressing to a newer version of that. Microsoft, um, uh, Meta are all working on their versions of chips. And Broadcom was involved in some of those developments as a kind of partner to them, but not necessarily forever. And that's a clear negative to NVIDIA over the long run when this frontier models are being trained or will be trained, or some of them anyway, on proprietary silicon, not off-the-shelf NVIDIA silicon. So it's it is changing a competitive set within frontier model training, but also more importantly, I think it's changing or can change the capex focus away from training towards inference, where the competitor set will be different. I mean, we're hearing for some industrial users, so-called edge AI, where models are making their decisions on devices like an industrial automation tool or a sensor. The AI algorithms work pretty well on tiny microcontrollers that are orders of magnitude cheaper and less sophisticated than what NVIDIA makes. But yeah, that's sort of probably a good moment to say, okay, well, how did the market react now that the dust settled somewhat from the initial announcement? How does the market react to that, and who seems to be winning or losing in the aftermath of this?
Yeah, and it was a huge response. Obviously, I think it was the biggest ever value drop in one day. I think the market lost $1 trillion of market cap on the day this news really hit sentiment. In fact, 600 billion of that alone came from Nvidia, these are remarkable numbers. But it was taken relatively well for the users of AI, obviously, because if anything, it's a cost benefit. So the hyperscalers, etc., some of the companies that were seen as big beneficiaries of AI rather than it just being a cost. And the evidence from companies that have talked about this so far, the main players that are out there, OpenAI, NVIDIA, Arm, these guys, they're definitely saying that it's an accelerant, not a threat. They would say that, wouldn't they, I guess? And it's certainly true that the demand for AI is still vast, and if anything, as the capability improves, the demand just gets bigger and bigger. And there are some very significant use cases that we all know about. Life sciences, drug discovery, autonomous driving. Increasingly, aerial urban transport will be autonomous and driven by edge AI and AI. Materials design, personalized gaming, you name it, autonomous robotics. So there's an enormous amount of demand for AI, and those use cases just keep getting bigger. And again, from an investment standpoint, the short-term evidence is pretty supportive. We saw this Stargate initiative from the US that came out days before the DeepSeek, and that spending is very much going ahead, and the players are still very focused there. Tesla and Meta both made renewed commitments on their results to spending, hundreds of billions of dollars in Meta's case, and similar from Tesla. And they both have very clear use cases. So, and it doesn't seem to have affected the valuations of some of these companies in the private space. OpenAI is looking to raise money now at 260 billion pre-money valuation versus it was valued at 160 billion just a couple of months ago in October, last year. So unaffected so far. But we do think there are some cracks appearing, and it's worth taking note of these. Microsoft, which has obviously been a big player, and they have this relationship with OpenAI, and if anything, they've been recently somewhat distancing themselves from that relationship, commitments to spend on the latest rounds of investment there. And they talk about the kind of fungibility of their investments in AI. So somewhat a bit of a sense that things are commoditizing, as soon as you step away from the very leading or cutting edge part of AI. And it does seem the moats around some of these models are quite narrow. Once they're no longer at the very forefront, then the cost they can take from these models drops very quickly. So some short-term certainty, but longer term there are some question marks, we think, right?
Yeah. I mean, that's the challenge. The way we think about it is, we need to answer three questions. What do you think will happen in our kind of 3 to 5 year time horizon? That's how we invest. How confident are we in that worldview? And is that worldview a non-consensus? And if all, this three tests, if you like, need to be met, or we need to answer positively in a compelling way to those questions for us to have an investment opportunity. And a lot of stuff that goes on in the AI world doesn't meet that criteria. And we're really interested in that notion of artificial general intelligence, AI models becoming as good as humans in more and more things. But there's still an article of faith in a lot of areas, and the use cases for that, the returns on that investment is still an article of faith. That is not what we describe as technological inevitability, and that's what we would like to see. And then some of the beneficiaries are very well discovered. We can't sit here in front of clients and say, hey, we've discovered NVIDIA is a structural winner from AI proliferation. It is priced to be. It is well owned, well liked, and we think undiscovered opportunities are elsewhere. And so we're trying to balance that. What are the pragmatic, clear investment opportunities resulting from all this, where we are not repeating what everybody else already knows. And for us, there's several places where we have, that view and that certainty of view or high confidence in that view, and it's relatively not priced in for that. One area is memory. We continue to see the appetite to build, if you like, more of that digital cement that builds this digital ecosystem, this data ecosystem, store more information, in ever more high fidelity, high resolution way, to learn more, to kind of find more insights using AI as a tool, ultimately drives demand for memory everywhere. And we continue to like that industry, even though at the moment it's not obviously priced in for that long-term success. Photonics, as you move this data in inference and in training between more places faster, you run out of copper. Copper can't cope with the tasks anymore. You need to switch to optical fiber and lasers to make this work. And we're starting to see that emerging in a very prominent way, and even an NVIDIA roadmap, they're going to use a lot more photonics in the next product iteration than they had in the past. But we're also very interested in lateral beneficiaries. All those IT projects and companies, deploying AI as a business tool require a lot of IT service, and that's an industry that's likely to benefit from that. We also see that software companies with a strong ownership of their domain, be it digital design or running telecom networks, running certain business functions, they can add AI as extra sugar on top, if you like, extra functionality to what they already sold for their clients, become more valuable and price for that. And so that's something that we're very interested in. And finally, to repeat what both Jensen Huang of NVIDIA and Elon Musk of Tesla had said in relation to AI, robotics, kind of the real world training of robots to do more and more sophisticated tasks, is going to be a huge application of AI. Now, we think component suppliers into robotics, so in fact, robot makers and machine vision tool makers will be beneficiaries of that. And we quite like that space as well. So we have some of those positions already. We've been adding to these positions over the course of the past 6 to 12 months. We've taken advantage of some of the price volatility around the news last week, and we look forward with optimism on what AI brings, but for a very pragmatic and, we hope, disciplined lens. So with that, I think we'll say goodbye for now, and we'll see you again in a couple of weeks' time.
Right. Thank you. Bye-bye.
Thank you.